All right, so today we're talking about SpaceX, and there are a lot of things related to it. So let's get started.
Okay, let's start at the highest level.
Okay.
Why is SpaceX such a consequential company?
Okay, so in the last 100 years, there's a Saudi Arabian company that went public at north of $1 trillion. And this will be the second one, potentially much larger, at between theoretically $1.5 trillion to $1.75 trillion. It's an enormous company. It has great potential. And as you know, we believe this has a great moat.
Yeah, and also what I find interesting is that this is one of the few companies that became so popular while remaining private for a very long time.
Well, and Ava, as you know, this is one of the reasons why we decided to place it in our ETF as the first position in our public-private XOVR ETF. Because we wanted investors, as you would say, this is your expression, democratizing retail access to private companies. And so this is the first one that we put in. We now have conviction stake in it, and we couldn't be more excited.
Well, when people think about SpaceX, very often they think about spaceships and, space in general. What else should they know about? What else is important when it comes to SpaceX?
Well, I mean, as you know, Starlink is the growth engine within SpaceX. So it's more than just sending rocket ships to the moon or Mars or putting people on different planets or solar systems. This is a company that's really revolutionizing the telecom industry, and it's cutting across many different areas. It's Starlink, which is a growth engine. Many people know this now because they're seeing streaming availability in various remote places around the world. Some people are going from point A to point B in a plane, and they're now be able to download movies while they're traveling internationally.
What makes the launch side of SpaceX economically different from every other aerospace type of company?
Well, the cost, right? What they've been able to do is drastically reduce costs by using reusable rockets. There's some launches now that have gone up and down 32 times. And so they're reusing their parts, and they're really revolutionizing space and in terms of the way we look at things.
So should investors think about it less like a dramatic launch and more like a efficient operating infrastructure?
Well,
that's
yes.
long term.
Long term, they're bringing the cost down significantly. They have more than half the satellites in orbit now, and this is a big deal, not only for telecommunications and remote locations. You can get it almost any place on the planet, many countries around the world. And they're building the new infrastructure, just like in the comparisons are made to railroads, laying tracks, and they're creating a whole new infrastructure led by the greatest entrepreneur probably the planet's ever seen.
Yeah, and I think also we should mention Starlink, which I like to call the cash cow of SpaceX, and how that affects the valuation of the company in general.
Well, it's really Starlink with their close to 10,000 satellites now, and how they're monetizing this for benefit of investors in the company. And you think about Starlink, it's more than just telecommunications. It's used for defense. It's not only remote places on the planet, on land, but also in sea and air. We're seeing many countries using it for multi-benefits across many different areas. Again, for the U.S., it's particularly important for long-term defense capabilities and security. It's a national security company now in the most global manner.
And when it comes to SpaceX valuation, this is a very timely discussion,
Right.
especially since there's rumors about a potential IPO down the road, perhaps in 2026. And there's analysts that value the company as a tech company, and there's analysts that value the company as infrastructure play, and it dramatically changes the way you evaluate a company, the way you see it. And how should investors think about this?
Well, this is a company, again, if it came to market based on the rumor valuations, 1.5 to 1.75 trillion, it would be coming out, potentially 40% premium to current levels where the last tender was. And whether or not these rumors are true, we don't know, right? We have no inside information on that. But if they're true, it would be among the largest, if not the largest IPO in the history of the planet. Now, if you look at traditional valuation metrics, whether it's market cap to revenues or market cap to profits, it's going to be coming out at the high end of the range. There is a range.
Yes.
And analysts put it there at the high end of the range, but still within those parameters. And so it's being priced as a very strong high-tech growth company, not as a telecom company. And again, when you think about who Starlink is competing against, they're competing against the most bureaucratic of the companies on the planet, the AT&Ts, the Verizons, and so forth. In some cases, they're partnering with them, and soon we'll see
T-Mobile.
People having access to their phones no matter where they are on the planet, thanks to the Starlink connection. That those that are not partnering, are in trouble. When you traditionally, as you know, my background is a professor at Babson College, the #1 school in entrepreneurship, and traditionally, when you put an entrepreneur up against a bureaucracy, the entrepreneur just crushes that bureaucracy. In the case of Elon Musk, we've got arguably the greatest entrepreneur that's ever lived. And I say this not only as an investor, I say this as a student of finance, as a professor of entrepreneurship, that this individual has far outshined all prior entrepreneurs, great entrepreneurs for the last 200-300 years, including John D. Rockefeller.
And what is the biggest mistake you would say that people make when they analyze SpaceX?
Well, they think of it as just a spaceship company, and they somehow get lost on the, trying to put life on Mars or life on the moon, and they focus on, what is the net present value of that? It's a goal. It's an exciting goal for the company, for the people who work there. But more importantly, what happens is that the message gets lost in terms of the operations getting satellites into orbit, and they do so in a very cost-effective manner. It gets lost on the benefits related to the Starlink infrastructure and the fact that this company's created infrastructure for many to benefit, whether it's consumers or the military, various government agencies and so forth. There's extraordinary benefit to be reaped from this combination. And then they're also, by the way, a lot of people are discounting or ignoring the fact that XAI is now part of the play. XAI was recently acquired by SpaceX at a $250 billion valuation. And many people are discounting the fact that you're putting potentially data centers up in the sky and competing. Now, people thought when SpaceX and Starlink did this a few months ago, this is now March 26, they announced the combination back in December or January, people discounted that. But now we're seeing companies like NVIDIA saying, we want to get data centers up in the sky. So this company has consistently been ahead of the curve. They're led by a founder who's a visionary, who's created wealth not just in Tesla automobiles. He's gotten into robotics. He's gotten into X with Twitter. He's got a boring company. He started off in PayPal. That's how he created his first $100 million plus in net worth. And now he's moving to Starlink. And this is an entrepreneur who's constantly redefined boundaries in different categories simultaneously. And it's extraordinary what he's done. He's built multiple companies now worth north of $1 trillion, right? And this entrepreneur, just to kind of take the point to the next level, a lot of people don't realize that when they think of NVIDIA, they think of Jensen Huang and what a great company he built.
Yeah.
And by the way, as you know, we got into this company 20 years ago when it was a $5 stock.
2005.
2005, and what were they doing?
They were creating cameras for backup cameras for the cars.
Cars, right. And we got into it back in 2005. And we've been in every Mag 7 from the very beginning, of our fund. We started in 2005, but when other Mag 7s came along, future Mag 7s like, Tesla came along, or, Meta or Facebook at the time, and all the Google and so forth, we got into these companies, afterwards, and they became Mag 7s, or, and soon to be a Mag 8 if SpaceX.
Yeah, do you think it will become the next Mag 8? And how would it compare to the rest of the Magnificent Seven?
Well, so SpaceX arguably will be the greatest of the companies within the Mag
I think so
8.
too.
It's got the widest moat, we believe, right? You and I share this opinion, the widest moat. These other companies, we're not sure who's going to win or lose on AI. And this is a company that's built the infrastructure on multi-dimensions, and they're combining AI with space and satellites and, in all these different facets. And they're decades ahead of the next competitor. I mean, they're putting up rockets hundreds of times in the sky per year. Other companies, for example, Bezos' company, Blue Origin's only done like one successful launch, and they're doing many times per week. And so this is an extraordinary company that's decades ahead of their next competitor.
Let's speak about the hot topic recently, which is IPO timing. And we've seen the news a few weeks ago. There's rumors that SpaceX might be going public in the summer with 1.75 trillion in valuation. What do you think? What do you think about the speculation out there regarding the timing and the valuation?
Well, again, it's all rumor at this point, but apparently they're having a investment banking bake-off, right? They refer to it as a bake-off when the investment bankers line up. And whether it's a Morgan Stanley or Goldman Sachs, and some of the prediction markets are saying which is going to be the lead banker. All the bankers will probably participate given the size of this particular offering. If it happens, we don't know that it will, but if it happens, it'll be an exciting development. Now, as we're sitting here in March, late March, there's still war going on in Iran. We had a drop-off in the markets beginning late October with AI trade falling off. So the markets aren't exactly timed, and we had additional news. As you know, it was it's been national news regarding inflation kind of picking up a little bit now with oil. Oil picking up due to the problems with Iran, and so the timing is not perfect right now in this early spring. Right in early spring, it's not perfect, but if things settle down, and then at the end of the day, people are looking around for potential plays in the second half of the year. This could be an exciting offering when we think about SpaceX, potentially coming out at 1.5 or 1.75 trillion. It'll be again one of the biggest, if not the biggest, offering ever. And there's some exciting developments behind that, around that. There may be other IPOs coming out later this year, whether it's an Anthropic or an OpenAI or something of this sort, Anduril. There are other potential IPOs that may come out in the second half of the year, but it all depends on market conditions, inflation, Fed rates, and this sort of thing.
There's many investors and many retail investors too that want to participate in this. They want to have access to the SpaceX IPO, potentially be part of it before SpaceX IPOs, especially since, and we've said this multiple times on TV, companies stay private for longer. What are the right questions that they should be asking?
Okay, so for an investor who wants to get into SpaceX before it IPOs, assuming it does IPO, there are limited choices right now. There's some interval funds, there's some open-end mutual funds, there are limited ETFs that participate. And so the question then becomes, how can an investor participate? Are there lockups available? So there are differences regarding a retail investor and accredited investor. An accredited investor is someone who's reached a certain threshold in net worth and income level. It's they have to have several $100,000 in income, over $1 million in net worth, and that locks out many people in this market. That's number one. Number two, even those people may not want to get into a SpaceX position, even if they have the chance, because there's a 6-month, generally a lockup period where they can't sell after IPO. We don't know for sure how long that will be, but if it's 6 months, that could be a critical time period. So when you think about, and then there are ways investors can, participate. Accredited investors, institutional investors, or high net worth investors, they can go to secondary markets right now, and there are places that offer these shares in the secondary market for high net worth investors, but they have to spend money for legal and review documents that can go on hundreds of pages, and then they'll be subject to the lockups. So we would argue that one of the most efficient ways to get in would be through an ETF where they could buy today and sell tomorrow. Having the liquidity is very important. That's what we would argue. Okay, and so that's why we created the XOVR ETF to enable this daily liquidity. Now, people have to recognize that traditionally most of the performance of this ETF has been non-private positions. Okay, so the majority of the weight, even today, we have a very strong conviction position in the exposure. We don't own direct shares, but we own exposure to SpaceX through something called an SPV, a special purpose vehicle. But that exposure right now has a strong conviction position in it. We feel strongly in this company. We believe we're optimistic about the future direction of this company, and investors can participate with our ETF today. And again, most of the performance will be related to non-SpaceX holdings. But if the IPO comes to fruition, they should receive benefit through that.
So, and we should have a disclosure here that this is an educational podcast. We are not saying here what investors should buy. We're just providing the framework. And the questions that we just outlined would be the same questions for any type of framework to get exposure to SpaceX before going public, right?
Correct. And it's always important for investors to know past performance is no guide to the future, good or bad. And so performance is not necessarily a guide. People also should recognize that the majority of this ETF is associated with large U.S. Large cap U.S. public companies, and as the markets move, that part of the portfolio is going to dominate the performance.
If you were telling listeners what to watch out for when it comes to the next couple of quarters, what would the list look like?
Regarding SpaceX?
In general, about the markets.
Okay, in general, regarding the market, currently, as we sit here today, there's a war going on in the Middle East with Iran, U.S., and other parties, and this is going to strongly influence the direction of the market, not only in terms of expenditures the government has to have regarding these war efforts, but also the biggest impact is going to be the Strait of Hormuz and the oil disruption to the oil markets. And so, as we've seen over the last 5 decades, when oil prices go up, it causes inflation, very quickly because there's so many inputs related to oil. And we also see something called stagflation. Now, stagflation is when the economy is not growing, but prices are going up. And this is a concern people have. Now, as you know, we've been bullish on inflation. Bullish on inflation meaning we've thought inflation was coming down. Let me put it another way. We've thought inflation was well under control until recently. Okay, we have been maintaining for most of the past year inflation's coming down. We see the job market softening, so we're not seeing upward pricing on labor. We're seeing spending, stabilizing. We're seeing some of the, and that may be in part, related to, crypto prices and other markets, which have fallen. So some of that type of spending has dropped off. We're seeing housing prices stabilize. In some markets, they're dropping, and that's been the primary driver of inflation. So we've been fairly optimistic that inflation was well under control. And through the second half of 2025, we saw the Fed reducing interest rates to the benefit of the markets, and we saw the markets flourish in 2025 by and large. Now, towards the tail end of 2025, the markets started to dip a little bit in November and December, particularly the growth markets. And there was concern about AI being overblown, concern about disruptions in AI because of Anthropic, concerns about job loss and so forth. And so there are a lot of fears in the market right now. Inflation, jobs, spending, government spending, all these things have entered into 2026.
Yes.
Now, coinciding with this, we're seeing a further disruption with the war in the Middle East, in Iran. And that's created a lot of concern for the market. So when the market sees uncertainty, it backs off. And that's what we've seen in the last few weeks. Now, if things settle down, they can reverse very quickly. We're seeing companies still benefiting from AI. They're expanding their margins. So by and large, many of the companies that we have benefited from in the last few years, we think are still there to benefit going forward. So when AI comes in and companies can do more with fewer workers, it doesn't help the job market for the U.S., but it helps the companies that are employing this to expand their margins. So we've seen firsthand many companies growing top line and growing bottom line. You know, because they're growing the top line, they're getting better margins, they're cutting their costs, and when you see revenues growing and costs going down, that widens the EBITDA, and we've seen that.
And going back to conviction positions in this specific market that you're just describing, what do you have high conviction of, and what would you prioritize? And again, we have our XOVR ETF, so people can see what we think based on how we weight our holdings, right? So what do you have to say about this?
Well, by far, our strongest conviction position, by far, is SpaceX. And if we had to have one position in the planet right now, public or private, this is the position we would have. Okay, we're delighted to have this position. We feel strongly about the future prospects of this position. We hope, we can't guarantee, we hope that they'll go public in the second half of this year. And if they do, we think the investors will benefit. And importantly, this position, because it doesn't move that often, it's not repriced that often. In the spring, when the markets have been off the last few weeks, 3 or 4 weeks in a row, because that particular position doesn't change that often, it's referred to as a cash drag in the market on the portfolio, which means the public positions will move, in this case, down, but this position is somewhat stable. So it's helped cushion the downward move in the portfolio. The inverse also is true. So if markets go spiking back up, that's going to weigh down until it's repriced, and hopefully it'll be repriced, in the second half of this year. So we're currently in a strong position with SpaceX exposure. It's not direct shares. It's in what's called an SPV, a special purpose vehicle, but it's in what we would consider to be a 0-0 effective structure, which means it does not have management fees or carried interest, which is important for investors to know. And if the IPO is true and it comes to market at $1.5 trillion or $1.75 trillion, we currently have it priced in our books. We got it $1 trillion. It later consolidated with XAI, $250 billion, so it's considered a $1.25 trillion position. And what we have is a strong conviction position in this particular exposure, which we couldn't be happier about.
Why is this specific market making you so we understand the fundamentals and why SpaceX is such a company that many people want to access, but why in this particular market?
In this particular market, AI is, people are debating, is it OpenAI, is it Anthropic? You could throw XAI in there and so forth. But it's that combination of, it has AI, but also has Starlink and SpaceX and other things related to it. And we believe this is what's going to maintain that moat. It is a very unique moat. We would argue it's the most significant moat in existence today of any company on the planet. This is our position. We would think it's the biggest moat of any company on the planet. And also it has all the right attributes. It has the satellites in the sky. It has the best people, the best minds you can have. It's got what we would argue is the best leader, charismatic and most dynamic leader that we believe ever lived. So Ava, I know you have a strong opinion on SpaceX versus Tesla. why don't you tell the viewers why you have such a strong opinion and which you like better and why?
Yes. So I think we should note, and many investors know, that we have an underweight in Tesla. We do believe in the company. We think it's a great company and it is going to do great in the future. But we see the most significant opportunity with SpaceX. And the primary reason is, in addition to be vertically diversified and touching many areas, now we also have XAI inside SpaceX, is that there's no other company like it. Some people can make the argument, I don't believe that's true, but some people can make the argument that there's more Tesla type of companies out there. And so the moat, there's not such a wide moat when it comes to Tesla. We never felt as strongly as we feel about SpaceX for any other venture when it comes to Elon's ventures. So that was our highest conviction by far. We have a strong weight in it, and it is the reason too that we bent over backwards to acquire that position. So it's a completely different way that we also evaluate the two companies. Again, SpaceX is an infrastructure play and has monopolistic characteristics, and we didn't see this type of trades as much when it comes to the Tesla position. We do believe we're bullish when it comes to Tesla, but if we had to choose between the two, we'll put a significant higher weight to SpaceX than Tesla because of the reasons I mentioned.
Okay, so to put another way, which I agree with, Tesla is a strong company. It's more than just an auto company. Obviously, it's more than just a EV company, but it's a company that's involved in robotics and other things, which has on its own a great trajectory, and it has a trillion plus valuation, a trillion and a quarter, trillion and a half. But I couldn't agree more that SpaceX has a trajectory which, in our opinion, transcends that of a Tesla. In our opinion, it has a bigger moat. In our opinion, they're both led by a great leader, same leader, Elon Musk, that we have a lot of conviction behind. But in the case of SpaceX and Starlink combined now with XAI, we believe that this is the company that's going to be one of the greatest of the Mag 7, soon to be, we think, a Mag 8. And this is why we're positioning such a strong conviction position in it. And we're doing so before it goes public. We think one of the other things that we've not discussed, which we probably should, is the potential for the S&P 500 index to allow SpaceX to enter in sooner. Mm-hmm. And this is something we should probably talk about.
Yes. What do you think about this? And that's not automatic, right? So
it's not automatic. It'd be unusual. Usually a company has to have a 1-year duration before they can get into the S&P 500. Now, what's important to know about the index is that there is about $5 to $10 trillion mapping the index in ETFs and mutual funds, 5 to 10 trillion. And there's maybe another 5 to 10 trillion behind that in institutional mandates that have to follow the S&P 500. Mm-hmm. So there's potentially somewhere, estimates are, maybe 15 to 20 trillion dollars that have a mandate to follow the S&P 500. Now, to put that in perspective, Tesla right now, which has about a trillion and a quarter to $1.5 trillion market cap, has about a 2% weight in the S&P 500. Mm-hmm. Now, SpaceX is arguably going to come to market $1.5 trillion to $1.75 trillion, which means that 2% weight would, on a $15 to $20 trillion mark, be $300 to $400 billion. Mm-hmm. Now, to put in perspective, when Tesla joined the S&P 500, the following 6 months or so, went up 57% or so, went over 50% up. Companies, when they first go public, and we haven't talked about this, I don't believe, but when companies first go public, the first few months out of the gate, when you look at over the last 15 years, companies like Facebook, when they went public, now it's called Meta, but Alibaba and Snowflake and Airbnb and Rivian, and you look more recently, CoreWeave and Circle, they tend to go up about 130% the first 3-4 months out of the gate, right after IPO. Now, if the lockup is 6 months, at 6.5 months, they're down about 43 to 46%. 2 weeks after lockup to the peak before lockup. That's almost a 50% drop. Now, a year after IPO, they're up 25%. And long term, we know companies like Meta, which dropped the first 6 months or so, long term companies like that did extraordinarily well. Doesn't happen every case, but you can't benchmark the first 6 months or so. And we think, as we discussed, SpaceX is going to be a strong performer, we believe, long term. Now, the interesting thing about this, if the S&P 500 fast tracks the index inclusion, that's going to have a massive impact potentially on SpaceX. And they're talking about a $50 billion float initially, which, if there's $300 to $400 billion in demand because of the index inclusion, that's going to have a very strong effect. Now, it's possible they base the index weight on the float, which means most of that $300 to $400 billion buying power may not be released until after the lockup. So there are concerns about what happens at the lockup. There may be forced buying right after the lockup, so it may mitigate the problem. But we think that SpaceX, when it does go public, will be, certainly a historic event. One of the biggest, if not the biggest, public offerings ever. We believe there will be a lot of pent-up demand from retail, which has been waiting for this and would like to enter in. Again, they can get into certain ways like our ETF and others beforehand, but the IPO is going to attract a lot of attention. And we are bullish about the prospects, particularly pre-lockup period, and investors in an ETF can get in and out anytime they want, along with buying the new IPO. And then we think long-term it's going to do well. So this is going to be a very exciting company to watch.
Thank you, Joel, for your insights, and thank you to our viewers for joining our discussion about SpaceX.